Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. I look at this daily chart, having been away for a while, and realize that once again the same basic drivers are moving the market despite the occasional hiccup. The rock of certainty is still anchored on the same few patterns. The middle tine, currently 17,250, and the upper tine, currently 2745, of the big 2017-2018 shallow bullish shift pitchfork. The upper tine has been especially significant 2 weeks ago when the top of the market was capped by the upper tine to the point. I also recognise the recent roll of the middle tine, currently at 19,990 of the October 2020 to March 2021 bullish shift pitchfork, and has played in showing the more recent bullish angle of attack. I can only quote once again what I said now some 9 weeks ago, and I quote, "Whilst these two pitchforks are in operation, the market will still have the bullish incentive, even if it sometimes looks like it is missing." End of quote. This has gone a long way to mitigating the actions we've seen last week, notably the wannabe key reversal down last Friday that ended up being just an indecisive spinning top with a long tongue on top. All the recent moves lower, I suspect, are directly related to the touch and go the market made with the upper tine of the big old 2017-2018 bearish shift pitchfork. The market nevertheless, in its drive higher, fulfilled the primary topside target X in a 2345 area for the May to date rising wedge pattern. The secondary target X1 in the 2780 area came close to also being fulfilled, but was hamstrung by that very upper tine I had previously mentioned. Anyway, the pattern objective had always been the primary target, so it's satisfying enough, and I will retire both targets at the end of this commentary. The next question is, what now? Well, prices this week have punched down through the short medium moving average currently at 19,200. The lower rising wedge trend line currently 19,195. The April to date uptrend currently 18,880. The medium moving average currently 18,590. And we're currently slicing down through the congestion from 2014 between 18,400 and 19,070. All this rapid declining has allowed the opportunity for perhaps a seminal moment here. You see, if prices continue lower to move below 18,345, then we may have the criteria, with just over a week to go, for a possible monthly key reversal for September. So if we manage to make a low below 18,345 and then to close on Thursday the 30th, either over at 19,600 or under 19,570, a quite narrow range, I'm sure you'll agree. So if we close either side of those numbers, then we'd be on. Now if we slice it thin and close in between, then we'll have made a lesser outside month. Right now we seem inclined for a monthly key reversal down, if we manage that new low. So what's below? Well, the immediate support will be the 50% Fibonacci line for 2021 at 18,185. Then the slowly rising long moving average, currently 17,950. However, the key support to my mind would be the lower tine, currently 17,675 of that same October 2020 to March 2021 bullish shift pitchfork. Breaking this will break one of the key rocks on which the current rally has been based on. So caution. LME 3-month zinc. As I said here in my commentary some 9 weeks ago, on the surface this metal looked like a gently rising market. But there were and are some significant forces at play here, and all is not what it looks. In recent weeks the market has risen higher, sticking all the time to the broken May to date rising uptrend, currently at 31.38, at least to the underside of it. I made the comment 11 weeks ago, which has proved to be true, that such action is not incidental and clarified my thoughts thus, and I quote, "It seems to me that the market is currently trying to navigate up this uptrend, but it has at the steering wheel someone seemingly heavily inebriated, overcompensating on each day, as prices generally move in the direction that is wanted. This is not safe, nor can it last. I would urge caution for when the drunken driver of this market either stops or gets pulled over." End of quote. I also still left targets X1 and X2 on the daily chart. These were, still are I suppose, the initial and full target levels for the diamond continuation pattern formed over January to March this year. The market once more reached target X1 in the 30.95 area last week and the week before. Additionally, I had previously expressed doubts about the market having the impetus to reach target X2 in the 32.15 area, and I was about to retire both these two a few times, but I kept them on just in case. The action during September showed that the diamond pattern from much earlier this year was indeed the driver for the moves higher, and until at least this week, all other patterns have been subservient to that core pattern, moving the market higher. I suspect that this diamond pattern had been the reason why prices had not triggered earlier possible bearish patterns when they should have. So what's next? Well, similar to other metals, of the current bearishness persists, that we may well have a monthly key reversal down for September. Now in this case, we need to move below 29.15, which, given we have just breached the medium moving average, currently 29.86, might well be possible. If we manage to do that by Thursday the 30th, then we would also need to close either over 30.32 or under 30.05. Again, possible. However, looking at how today the seemingly passive April 2019 high at 29.58 had managed to halt the decline, I'm conscious that perhaps the move on the downside may have spent some of it, if not all of its energy, in getting where we are now. Looking beyond the lows of August, we next have support at the gently rising long moving average, currently 28.89, which interestingly would be quite close soon to potentially target X3. This is a potential target should the action over the past 2 weeks turn out to be a small double top. So watch carefully. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.